Hey everyone, I thought I would just come on to show you how I personally not really calculate but determine supply and demand zones. Now, supply and demand is actually one of the few technical strategies that I still apply despite being a quant-based trader and planning most of my trades with statistics. I find supply and demand very helpful for swing trading. And one particular stock that I have done both statistical and supply and demand based analysis on is XBI. So I'm going to show you like a really quick and easy way to do supply and demand, at least how I do it. I think it differs depending on the person, like how they want to do it, but this is the way I use. It's extremely helpful, and hopefully you can take something away from this. So the first thing we're going to do is we're going to go to the daily of whatever stock you want to do this for. We're going to determine where we are, which is right here. And so your time frames will vary because I am planning to do a swing trade. I'm going to be looking at the weekly, and I'm doing a swing trade with shares. So generally, when I do a swing trade with shares, I'm holding for an average of maybe a week to maybe a month. It depends. So I'm going to be looking. You can do this on the daily, but just in the interest of saving time, we're just going to do this. We're just going to skip right to the weekly. So we're going to go to the weekly. We're going to actually switch our candles to Heikin-Ashi. And voila, here we are. So the key to calculating supply and demand is to identify where our most recent uptrend started and where our most recent downtrend started. So looking at this, we see our most recent uptrend started here on the week of April 20th, the week of April 6th in 2020. And our most recent downtrend, which we are still technically in, started on the week of February 22nd in 2021. So then to calculate our demand, we're going to look for the start of this uptrend, and we're going to look for our first solid bottom bullish Heikin-Ashi candle. So that would be this right here. You see there's no tail. Like there's a tail on this doji candle here. There's no tail on this. It's flat bottom. It's bullish. This is this candle signifies that the trend has committed to a reversal to the upside. So we're going to just draw. We're going to go into our tools here, and we're going to choose rectangle, and we're going to draw a rectangle from the bottom of this candle to the top. And this actually is now our demand zone. So if we draw that out, we have a demand zone. But we see that XBI has fallen below this demand zone. It's kind of lingering on this demand zone. So we're going to just go ahead and see if we can find another uptrend that's a little bit more close. And in fact, there is one right here, which kind of overlaps. But this actually proves a point. So if we look here, you see how it kind of overlaps because essentially the demand zone hasn't changed. We entered back into this area. See, we entered back into this demand zone, we bounced, entered back into this demand zone, we bounced. You can see here it kind of went out, but then it bounced up. We kind of went out, so I'm anticipating us to bounce up. So yeah, it's pretty straightforward. To calculate the reverse of the supply zone, we just find where our most recent downtrend started, which is right here. We find the inverse candle, which is the flat top red bearish Heikin-Ashi candle, which is right here. And then we do the same thing. We just draw a line, and voila, there we go. And you can technically do this like for each downtrend, like here, here. because the market is pretty heavy, that's generally how I would gauge my exit. So here would be a supply zone. So this would probably be my first exit here, here, etc., etc. Now you can even do, and I find this very helpful as well, is just to do the monthly, because the monthly is going to give you some pretty good data. So we look for our most recent uptrend, which would be here. You can see that, you know, we've fallen below. So let's see where our previous uptrend started before this uptrend. So this was downtrend, consolidation right here. So we had a downtrend, and then we had conviction to an uptrend right here. We uptrend, pulled back, consolidated, new uptrend started, and then immediately we started a downtrend. So we're going to go ahead and start up this. So there is our bullish reversal candle. We're going to draw a little box, draw that out. We're going to go back to the daily and look at that. We are actually bouncing off of that. And so that is interesting. And then you can do the same thing on the monthly for the supply zone. So like, you know, we have a supply zone up here. We have a supply zone here, here, etc., etc. Now, we obviously have a lower demand zone. So we have a demand zone down here as well. So the key here is not to prematurely enter. It's to make sure that the demand zone is respected. So if we go back to the daily, you know, we're bouncing off. We have, so you could have got in here on this candle because Heikinashi, it's flat bottom, it's bullish reversal candle. You could have got in here and, you know, rode it up. But we're obviously getting some pullback. So what I'm going to be watching is where this goes. If it comes into this zone and then starts bouncing out again, I am going to be getting in because that is actually a fairly bullish sign, right? We go up, we bounce, and then we go up. This is a fairly bullish pattern. If we, you know, go up and come down and then bounce out of this pattern or out of this demand zone, then I know that this demand zone isn't holding. It's not, and so then I'm going to look to the next demand zone to find my entry. Now, your entry point would be for a swing trade, at least your entry point would be like confirmation. For me personally, I mean, this is, you have to base it on your own style, but for me personally, it's confirmation. So bounce in and then bounce out would be my confirmation. So this kind of movement here, if we see this, as soon as we exit this demand zone and Heikinashi is flat bottom bearish, or flat bottom bullish, I am going to be entering long because to me that is confirmation. And then I'm going to be entering long to my next supply zone where I'm going to be scaling out. Because the market is extraordinarily heavy, I'm going to be conservative with my targets. I'm going to be looking, my final target will be this supply zone here, and I'm going to be just scaling out along the way with basic support and resistance. And that's about it. That's how you can easily figure out supply and demand. Let me know if you have any questions. Thanks for watching.